Hey everybody, my name is Brandon from thestockstudents.com, and today I want to do quick stock reviews on Aphria, Rolls-Royce, and Cisco. So now let's get started. So here we are in Google, and here's a 5-day look at Aphria's chart here. And we can see that we had a pretty nice jump midweek when everybody was talking about the Reddit and Wall Street Bets crowd actively talking about stocks like Aphria, Tilray, and Sundial Grows. But then we also fell on Thursday, as with the other stocks, where we fell over 40%. What's a little interesting to me is that Aphria showed some strength on Friday, ending the day up fractionally, while the other Wall Street Bet stocks like Tilray and Sundial Grows continued Thursday's fall. This may be nothing, but again, it's just interesting to note that we are stronger than Tilray here, even though Aphria and Tilray announced back in December that they were planning to merge together. Because of that, investors may be trying to play the merger arbitrage game, where if you buy shares of Aphria, you may get a discount at the merger because Aphria stock will become Tilray stock once the merger happens. Doing this has its own risks and is kind of complicated, so this article that I'm showing you does go through the math, but just be careful, and if you're going to play the game, just make sure you do your research and understand it fully. So if we transition to the earnings report of Aphria, we can see that we're actually growing revenues nicely year over year. And we can see that after the cost of goods, we are still able to capture a growing gross profit year over year. Now for the expenses, we are growing general and administrative nicely year over year, and we're also growing selling year over year. So we are growing expenses slightly year over year for general and administrative and for selling, but it's not as bad as some of the other companies that we've been seeing on the channel recently. So really the only concern that I have is valuation for Aphria. As you can see, this is a $5 billion USD company, which is only making about 43 million Canadian dollars in gross profits before the operating expenses. And if we include the operating expenses, we are actually at a net loss of 43 million Canadian dollars. So what we're doing is that we're saying that this company who's losing $43 million is worth $5 billion. So valuation is one of the downsides that I see here, but as I've said in the Sundial Grows episode, Aphria's product and market is currently illegal in the United States, so the potential for decriminalization or legalization legislation is a firm tailwind for the sector in the months and years to come. And with the upcoming merger with Tilray, we may be able to better compete against companies like Canopy Growth. So if we transition over to the trading charts here, we can see that we really climbed the mountain with the Wall Street Bets crowd here and then came back down to earth. We're actually around the resistance level here, around the $16 to $17 level, so I wouldn't be surprised if we bounce off this level and consolidate around where we are right now. But if we do break the support level, we would be dropping back down to this major long-term support level around this $12 and $13 range. If Aphria comes back down to the $12 to $13 range, I'd be inclined to take a harder look at the stock because of the tailwinds for the sector, like I mentioned before, and the potential merger with Tilray trying to compete against the giants like Canopy Growth. And just to cover the other major indicators here, we can see that the MACD, which is a measure of momentum, is about to roll over, which means that the blue line, which is a measure of short-term momentum, is about to cross our orange line, which is a measure of long-term momentum. What that means is that our short-term momentum is becoming weaker than our long-term momentum that we're normally seeing, and that's normally a bearish sign. So now that we've covered Aphria, let's head on over into Rolls-Royce. So here we are in Rolls-Royce stock, and as you can see, we are up almost 200% in just the last trading day. So there's not a lot of big news coming out of Rolls-Royce that could be moving the stock, but Deutsche Bank and some journalists and analysts did come up with some positive words on the company. But that said, I don't think positive words should move this stock up 200% in a single trading day. But if I'm wrong or if I missed something, let me know in the comment section down below. The next point I want to make here is that even though we know Rolls-Royce as a maker of really expensive cars that I probably would never be able to afford, they're actually focused as an aerospace company who makes engines for airplanes. So now that we know what Rolls-Royce is actually making, let's head on over to the trading charts so that I can try and explain to you the weirdness that is going on with this ticker RLLCF. So here we are in the trading charts, and we can see that the trading charts look really weird. The reason for this is because us in America can access the stock through an OTC or an over-the-counter ticker, which is RLLCF. However, the ticker that our friends across the pond in London use is RR, which we can see is much more, shall we say, stable than the RLLCF that we have over here. So immediately, this causes me to be a little suspicious. Firstly, because if RLLCF and RR is supposed to be the same company, and RLLCF is up 200% in a day, but RR is only up fractionally on the same day, to me that's a little sus. So that said, that immediately turns me off from investing in Rolls-Royce because I don't fully understand why RLLCF and RR are trading so differently, even though they're supposed to be the same company. But with that said, let's take a look at the trading charts of RLLCF, and we can see that we are experiencing extreme volatility. I would be very cautious here, and honestly, there is not a lot I can say about the levels because we are so volatile for such a short amount of time. We do see that the MACD and the RSI are extremely high. I mean, if we look at the number on the RSI, that's one of the highest numbers I've ever seen. It's at 96. So with all of that said, if you understand what you're investing in and the real risks involved and want to buy the stock, then the first place I would step in if we zoom in here. So the first place where I would want to step in if I was feeling lucky and I wanted to play the rebound up to the more stable levels that we've been trading at is the very bottom of this candle at about 0.003 cents in order to play the rebound up to the more stable equilibrium. So here we are in Cisco stock, and as you can see, we really dropped after earnings about 5%, but we then stabilized and then tried to make our way back upwards. So the main question I want to try and answer here is, why did Cisco fall after earnings? So there were a couple of reasons of why the stock fell, and these were mainly fundamentally driven. So if we switch on over to the earnings report here, what a lot of people were saying was that year after year, the company's revenues didn't grow as much. They were basically flat year over year. And the guidance that the management gave on the earnings call was that they were expecting about a 3 to 5% raise in revenues. So, to be fair, Cisco is a huge company, so raising the revenues by 3 to 5% is actually okay in my opinion. But today, people are really looking for growth, and Cisco is quite a value play. They already had that growth many years ago. So those growth numbers were actually kind of smaller than what most of the analysts or investors wanted to see coming out of Cisco. Other than that, I also think some investors were slightly rattled by the management's comments on the call, saying that there were some weaknesses that they saw in the business enterprise sector, which honestly surprises me a little bit because I would have thought that companies would be spending more on IT infrastructure to keep up with the work from home trend. As we go on and hopefully out of the health crisis in the next couple of months, before investing in Cisco, you should really think about if you think businesses will spend more or if they will spend less on IT infrastructure. This is because this is one of the core businesses that Cisco has. Other than that, the fundamentals of Cisco look incredibly good, as should be expected with a big legacy company such as Cisco. So really nothing concerns me about Cisco's earnings report other than the growth rate. And even the growth rate doesn't make me worried at all. So with all that being said, moving on to the trading charts here, we see that we're kind of in the middle of no man's land at the moment. We see that we are in the middle of a short-term resistance fractal in between the $49 and $50 level and a short-term support range between the $44 and $46 level. So to me, because I want to pinch pennies, I would want to wait until we get to around this $44 level here, mostly because I'm cheap and also because it has acted as strong support for the past few months. Now, we may not be able to get all the way back down to 44 because we did recover from the earnings drop that we had. However, if we look at the MACD and the RSI here, they both look to be rolling over, which is normally a bearish sign, so we could see a small price drop in Cisco. So that being said, Cisco is a huge company, so its volatility is much more tame than some of the other stocks we've been talking about. So the chances of it getting down to 44, that's like a 10% move to the downside. It's not unheard of course, but it's, the probability is not as great as it would be if it was for a higher growth company such as like NIO or Tesla. Normally why people invest in Cisco is because it's a steady business and it offers a pretty good dividend of about 3%. So if you just want to add some more stability in your portfolio where you might not get as much gains as, say, Bitcoin or Tesla, adding Cisco could act as a nice way to insulate your portfolio from extreme volatility. So those are my reviews on Aphria, Rolls-Royce, and Cisco. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.